Hey guys, I'm Amang and today we'll talk about India's digital loan market. So as you all know, digitalization has completely changed the game for all the players in the industry, ranging from a retail shop to a corporate bank. And all of this has been possible because of the evolution of fintech companies. For those of you who do not know what a fintech company is, basically it is a company which makes use of modern technology and softwares to provide better financial services to the greater public. Examples are Paytm, PhonePe, etc. Now coming back to the topic, recently Facebook announced that it will initiate its first small loan program in India. And it's not just Facebook, all big firms like Xiaomi, Amazon and even Google have an eye on this new emerging market. Let us understand why this is happening. Ever since the pandemic began, the use of digital payments has increased like anything. According to reports, digital lending is expected to be a $1 trillion industry in the coming years. And India is a very competitive market. So to gather a small piece of market share, a company has to either perform really well in terms of innovation and marketing, or they have to grab the first mover's advantage in a typically new industry. And hence this is the reason why all the big firms are jumping on this highly unpenetrated market. So let's talk about the positives of digital lending and how it can add value to the already revolutionized industry. If you have noticed, our economy has been doing really well recently, and this can prove to be a really great time for big firms to enter this market. Why? Because whenever an economy grows, the business grows too, and along with it grows the need for credit for expansion. If we take a closer look, Facebook is planning to roll out these loans ranging from 5 lakhs to 50 lakhs with an interest rate of 17 to 20%, and all of this possibly without collateral. Since the beginning of modern banking in India, the process for applying for a loan has been too lengthy. Time constraints, legal paperwork and stress has always been there, and hence digital lending can prove to be the solution to all these problems, as one would be able to avail a loan by just filling a few formalities on his or her mobile phone. So summing it all up, digital lending has a lot of potential, but all of this comes with a lot of risks too. Big companies like Facebook could potentially become dominant players in this industry, and they could very badly impact the already established players in this industry. The recent Twitter fiasco has alerted the government, and there could be a lot of arguments between the companies and the regulator. It could also turn out to be a flop show, as people would prefer a traditional bank giving an interest rate of 14% rather than a digital bank giving an interest rate of 18%. The only target audience will be people who want loans without collaterals, and that would amount to an increase in bad debts. And if you don't know yet, India's bad loan ratio is already on the rise and is expected to grow to 11.3% by March 2022. Another question we all can ask is that if all of this succeeds, is it a bye-bye for physical banks? Well, I personally don't feel so. Why? Because when this pandemic started, all the movie halls were the first to close. We shifted to watching movies on online platforms, but does that mean you're never gonna go for a movie when the halls reopen? No, right? Similarly, however digital the services might be, I don't think the physical banks are gonna close down, because there's this customer experience that no digital platform can offer. Not anytime soon at least. Alright guys, that's it for this video. Let's see how this digital lending industry shapes up in the future, and I'll see you guys in the next one.